G'day Gain Squad. I'm stoked to have you here for another session at Goldie Gains. Let's see where the smart money is flowing today, because the markets are moving at light speed. Today, we are breaking down the massive gold rebound that kicked off between March 31st and April 2nd. We will also look at why the Iran ceasefire talks are sending oil volatility through the roof right now. And we'll analyse why the tech giants are losing their steam while copper flashes a massive warning signal. Before we dive in, remember this is not financial advice, so please do your own due diligence, gold getters. The big question today is this a genuine gold reversal or just a sneaky trap for the bulls? Do you reckon gold is ready to reclaim $5,000, or is the March crash not over yet? Drop a comment below with your predictions and hit that like button to support the channel. Subscribe now to stay ahead of the curve and join our growing community of savvy traders. Gold has been on an absolute tear recently, trying to find its feet after a brutal month of selling. On March 31st, we were looking at a price of $4,578 per ounce. That was the tail end of a massive 14% drop that really shook the confidence of many traders. But by April 1st, the price surged back up to $4,787. As we hit April 2nd, we are seeing the yellow metal stabilise around $4,796. The market's having a bit of a wobbler lately, but this 3-day recovery is actually quite impressive to see. We basically saw the worst monthly decline since the 2008 financial crisis back in March. A lot of that was due to leveraged positions being unwound as investors rushed to grab cash. But now that the liquidations have slowed down, the smart money seems to be stepping back into the fray. It's a proper relief rally that has everyone wondering if the worst of the volatility is finally behind us. The main driver for this sudden change in sentiment is the breaking news regarding the conflict in Iran. President Trump told his advisors on March 31st that he's ready to end the war within weeks. He even suggested a ceasefire could happen even if the Strait of Hormuz isn't fully operational yet. This was a massive pivot that caught the bears off guard and sent gold prices jumping higher. At the same time, reports suggest the Iranian president might be open to a settlement under certain conditions. This potential de-escalation has taken some of the war premium out of the US dollar and the DXY. When the dollar index retreats from its 10-month peak, gold usually finds plenty of room to run. Traders are breathing a sigh of relief as the threat of a full-scale global energy crisis starts to fade. However, the US military is still keeping the pressure on to ensure the shipping lanes are actually safe. It's a delicate balance of diplomacy and force that is keeping the commodity markets on their toes this week. Let's talk about the Strait of Hormuz, because its closure has been a massive headache for global trade. Since late February, about 20% of the world's oil and gas has been stuck behind this blockade. Iran has been using a selective interdiction strategy, only letting certain tankers pass through safely. They've been favouring ships that settle their oil trades in Chinese yuan instead of the US dollar. This has been a massive boost for the Petroyuan and is a major step in the de-dollarization trend. If the strait finally opens up, we could see 7 to 8 million barrels of oil flood the market. That would be a huge injection of liquidity that could help cool down the global inflation shock. Reopening this choke point would also lower the insane insurance premiums that shipping companies are paying. It would essentially signal that the energy-driven inflation tax is coming to an end for the global economy. But until the first tankers move freely, traders are staying cautious and keeping their hedges in place. Looking at the energy markets, WTI crude oil has been oscillating around $103. The OVX oil volatility index has been off the charts, hitting a massive reading of 95.8. This reflects the pure panic that hit the energy sector when the supply lines were first cut off in February. On April 1st, oil prices actually edged lower because of those Trump ceasefire comments we mentioned. A retreat in oil is usually a bit of a headwind for gold, but the weaker dollar is offsetting that. The OVX shows that the market is still pricing in a lot of uncertainty about the next move in Iran. If the peace talks fail this weekend, we could see oil spike back toward $130. But if they succeed, a massive risk-on move could see oil prices fall back toward $80 quickly. We're also seeing high volatility in the GVZ Gold Volatility Index, which is currently sitting at 38.9. That's up over 100% from a year ago, so the quiet days are definitely long gone, mates. Now, check out Dr. Copper, because he's sending a message that every gold getter needs to hear. Copper futures have rebounded slightly to $5.60 per pound as of April 1st. But the copper to gold ratio has slumped to its lowest level in over 50 years right now. This ratio is a classic indicator of economic growth versus safe haven demand in the global markets. When it's this low, it means the market is terrified of a deep recession or industrial stagnation. Copper is struggling to reflect any real industrial demand, despite all the hype around AI and green energy. It suggests that high energy costs from the war have been a massive drag on global manufacturing. For the ratio to recover, we really need a growth story to come out of China or the United States. Until then, the dominant role of gold over copper shows that safety first is the current mantra. If you see copper starting to outperform gold, that might be your signal that the global recovery is starting. Moving over to the stock market, the magnificent 7 tech giants are having a bit of a rough time. All 7 of these elite stocks have actually declined in value so far this year, which is a big shift. Investors are getting a bit skeptical about the massive spending on AI infrastructure and the payoff. We did see a tactical bounce on April 1st, with Nvidia rising 5.6% to reach its target. Alphabet and Meta also saw some green, but analysts say this might just be a powerful short squeeze. The Nasdaq jumped 1.2% on Wednesday, but it's still facing some heavy resistance levels. There's a noticeable rotation happening, where money is moving out of overvalued tech and into hard assets. When the big tech names struggle to lead, it often creates a vacuum that gold is more than happy to fill. Even the smart money is starting to diversify away from pure growth and into more defensive positions. This is a proper golden entry for those who think the tech-led bull market needs a bit of a breather. Let's talk liquidity, because the US debt wall is a massive hurdle we're all facing in 2026. We have about $9.6 trillion of US government debt maturing this year alone. Most of this was borrowed when rates were near zero, and now it has to be refinanced at 4%. This is going to send interest payments over $1 trillion, which is a record-breaking amount. Traders are calling this fiscal dominance, where the government's debt basically dictates Fed policy. If the Fed is forced to cut rates to keep the government solvent, gold is going to absolutely moon. The total national debt is now over $38.8 trillion and growing every second. Cash is starting to look like a guaranteed loss when you consider how much money needs to be printed. This mathematical certainty of currency debasement is the long-term engine behind the gold bull run. It's why central banks are gobbling up gold at rates we haven't seen in decades to protect their reserves. Once the war ends, the big question is, which region will see the biggest economic boost from the peace? Europe is currently the most exposed because they've been hit so hard by the spike in gas and oil prices. A peace deal would prevent a technical recession in the Eurozone and might stop the ECB from hiking. Japan is also in the line of fire, as they import over 85% of their energy needs. Their airline and manufacturing sectors have been hammered by rising fuel costs and a very weak yen. A reopened Strait of Hormuz would lower their input costs and finally give their economy some breathing room. We saw the Nikkei jump 5% on April 1st, just on the news of potential peace talks starting. If the war ends, Japan could see a massive catch-up rally as foreign investors return to their stocks. For the euro, a peace deal could see the euro-dollar pair break back above the 1.15 level. The relief in energy prices would be like a massive stimulus package for the entire European continent. China also stands to win big because their export model is currently being choked by high logistics costs. They've used the war to promote the yuan, but a global slowdown would eventually hurt their factories. Their trade growth started 2026 strong, but domestic demand is still quite sluggish for now. A peace deal would allow them to import more high-quality goods and balance their trade accounts better. Down here in Australia, our ASX 200 jumped 2.2% on the 1st of April. The rally was led by our major gold miners and big resource stocks like Northern Star and Evolution. But the RBA is still being quite hawkish, having raised the cash rate to 4.1% in March. Higher energy prices have pushed our inflation toward 5%, which is making the RBA nervous. If the war ends and oil drops, it might mean the RBA can finally stop squeezing Aussie households. Australia is in a unique spot as an energy exporter, but we still feel the pain at the petrol pump like everyone else. De-dollarization is no longer just a theory. It's happening in real time, right before our eyes, traders. Central banks bought over 800 tons of gold last year, showing they want out of the dollar. The dollar's share of global reserves is at its lowest point since 1994, which is huge. Even countries like Poland and India are aggressively adding gold to their hard asset stockpiles. Gold is the ultimate diversifier because it can't be frozen or sanctioned by any single government. As the world becomes more multipolar, gold is reclaiming its throne as the global anchor of value. Let's optimize this entry by looking at the 4-hour chart where we see 3 white soldiers. This bullish pattern formed between $4,576 and $4,701. The MACD is currently rising in positive territory, which shows the bullish momentum is properly strengthening. Over on the 1-hour chart, we've broken the 4,682 resistance to head higher. The 4-hour RSI is sitting at 63, so there's still a bit of room before overbought. However, the daily RSI is much lower, at 32.8, suggesting a deep oversold state. The market's having a bit of a wobbler near the 4,759 retracement level. If we hold above the 20-period simple moving average, this is a proper golden entry. To summarize, gold has rebounded nearly 5% in the last 3 days to reach $4,800. The catalyst is the Trump peace pivot and the hope that the Strait of Hormuz will soon reopen. Oil volatility remains extreme, but WTI prices are starting to cool off as ceasefire talk intensifies. Tech stocks and the Magnificent Seven are underperforming as investors rotate into hard assets and commodities. The US debt wall of $9.6 trillion makes a very strong long-term bull case for gold. Europe and Japan will benefit the most from an end to the war due to their energy dependence. Technicals look bullish in the short term, but we need to clear the $5,000 mark for a full reversal. So, smart money. Do you think Trump can actually pull off a peace deal by the end of the month? Or is this just another case of the market getting ahead of itself before the next leg lower? Let me know in the comments, and don't forget to like and subscribe for more Goldie Gains. Keep your positions tight and gains golden. I'll see you at the next close. Cheers!